How's everybody doing today? Welcome back to the channel. Guys, as you can see, the market is down once again, huge. It's down over 530 points here today. And we're going to be talking about like the top stocks, in my opinion, right now that have been going down quite a bit, that have quite a good potential, right? Right before we jump into it, make sure to open up a Webull brokerage account if you haven't already. Basically, if you just have like one brokerage account, make sure to open. It's always good to have more than one, and it's alternative to Robinhood. I do think it is a lot better than Robinhood, in my opinion. So make sure to sign up. I'll have a link down in the description. All you have to do is deposit $100 first. Sign up, make a brokerage, and then just deposit $100, and then you'll get 2 free stocks for absolutely free. So who doesn't like free money? So it's down over 2%, right? But obviously the Nasdaq is always lower, less the 1.3%. And it's even rebounding quite a bit. But we're gonna be talking about not quite tech stocks today. Some of them are, but we're gonna be talking about ones that are down quite substantially. So the first one, in my opinion, is ticker symbol Cake. In my opinion, this will be rebounding in the next, maybe not next year, but for sure by 2022 this should be rebounded pretty much back to where it was. Basically, if you ever have been around the Cheesecake Factory, you know that there's lines through the door. Like, people love their cheesecake and love their restaurants. They're placed in such good locations as well. And they also own another brand called North Italia. So it's not only Cheesecake Factory, they do own some quite few other brands. And they're so, like, in my opinion, this is really cheap at only a 920 million valuation. They do have some cash on hand as well. Their dividend yield will be cut, in my opinion. Like, I think it already did get cut. If not, it is really soon. But they're probably not going to be making too good of revenues in the next year or so. I would say there's probably around a 10% chance they might go bankrupt, but it's pretty slim. They are making money at the end of the day because people do takeout and stuff like that. But um, I think more than likely, if it goes down a bit more, I'm gonna be buying heavier because I did purchase some on my own, but I do think I'm gonna be buying some more shares. I just bought in a double digits, like I didn't buy too crazy amount of shares. I got like around 20 shares or so, so don't have a crazy amount. But if it goes down below 20, I'm definitely gonna have to look into picking up even more because I do think it's always been around this 30 mark, right? 35, 40 mark, always last 5 years. So I do think that it could easily bounce back. I'm not sure if it can go below 15 again, but if it goes around 18, I'm for sure like loading the boat. In my opinion, it's gonna be a good one. With only a 920 million market cap, that's nothing, guys. That is not a lot. So for that much, you can literally own every single one. And they also own the brand North Italia. Basically, they're just a restaurant chain. They have a few chains that could open up a lot more. But if you look at their reviews are insane. Like, they're not a big company, but all the restaurants have thousands of reviews, which is pretty crazy. And they are open over all this. So they're still getting like business. So they're not like completely done. Obviously, with the delivery services and stuff like that. The next stock is definitely an interesting one. It's not necessarily cheap right now in terms of what price it always was because it did rebound, right? But I do think it could be definitely a good one. It's Upwork, guys. If you don't know what it is, basically it's a freelance site. If you've heard of Fiverr, it's very similar to Fiverr. So basically, if you're at home and you want to just you have a skill, let's say you're good at graphic design, you're good at video editing, you're good at web design or something, right? You can just sign up on Upwork and people can bid, and you can bid on people and actually have work to do. And obviously, throughout all this, a lot more people are working from home, right? A lot of people are moving to freelance. Even in the last decade, I would say, last decade has been huge for freelancers. Me myself, I actually do use Upwork, not as much as I do Fiverr for doing jobs. Like, you can set your prices pretty high and actually just get work on the side. So I do freelancing on the side. I do think that the industry is pretty cool because I could literally be on a weekend, have nothing to do, and make some money on my home as if I just have a skill. In my personal opinion, I do think it's gonna be going up a lot quicker. If you look at the 5 year chart, it's not that expensive. Like, if it goes down up to 20, then that might be pretty good. Now, this is not the crazy thing. Let me show you this next stock. I'm not saying buy this stock. Do not buy this stock. But the stock I'm gonna show you is Fiverr. It basically does very similar stuff to Upwork. It's more mainstream though. Upwork is not as mainstream. Upwork is more business oriented. Fiverr is more like everyday's person, right? But look at this. Look at the year chart for Fiverr. Oh my god. It's up 210%. Is it up today? Okay, it's not up today, but it's up 200% in 3 months. What the heck? That is crazy. Like during the pandemic, it went down like 20% and then it went up 300%. What is this? Look at this chart, man. So if this happens to Upwork, imagine the demand happens to Upwork like this for freelancing. I mean, Upwork is probably the second biggest, right? Like if you Google freelancing websites. Okay, freelancing websites. Oh my god, my all right. Number one is Upwork. Like they literally have it number one. But if you go to like Upwork, but if you look at, I'm pretty sure they're the second biggest. Okay, freelancing websites. Number one, Fiverr. Yeah, they're the biggest. Number two is Upwork. Like they are a lot bigger than all the other competitors. I've never heard of any of these other competitors. I've heard of this. Oh, I don't know. Craigslist doesn't really count. And I've heard of Freelancer, obviously. So I do think Upwork has some potential here. Obviously, like let's say I don't know. Let's say I want to do some random design, right? Like you can hire someone pretty easily here. They're obviously a lot more they're a lot more professional when it comes to their stuff than Fiverr, and I don't think they're as international as Fiverr as well. But other than that, I do think they could definitely get pretty big, especially if it goes down to maybe. I mean, it's already up 20% this week, so I don't want to say like I don't think it'll come down, but it might be a buy right now to buy a few shares, pick up a few shares, and maybe if it comes down, if another opportunity arises to buy some. But even at this price, like it could easily, in my opinion, go to 20s, high 20s. Um, yeah, even low 20s, even the 20 mark, that will be a substantial gain. But yeah, that is that with Upwork. Next up is Disney. Now the thing is, they've been hit pretty hard because they own ESPN and the sports side of things as well, and they've been hit pretty hard. Obviously, all sporting is shut down, so they're kind of screwed in that department. Their P ratio, I don't know if this is accurate, but it's not the best. But either way, I think they're a pretty safe company because especially Disney, like Disney's not going anywhere. At 108, it's down another 2% today. I do think it might be a pretty intriguing buy. Um, Now the thing is with this one, um, it's Disney at the end of the day, right? They're not gonna be going anywhere. So I do think it could pretty easily if you just hold this for another year or two. Obviously, their Disney stores are not good right now. Like their Disney stores are not in a good situation, right? So I don't think they're gonna be doing too well within the next year or two. But 2022, I do think they're gonna come back. Obviously, Disney cruises, Disney hotels, Disney park, they're screwed in that department. Entertainment side of things, their movies, there's no movies to release in movie theaters. Their Disney Plus, on the other hand, is doing pretty well. So overall, I do think how diversified Disney is. They're just crazy. They're all over the place. Man, they're a $200 billion market cap. So at the end of the day, I don't think they're going anywhere. They've been kind of a growth company in the last 5 years, last 10 years or so. But we just gotta wait and see. I don't really think it's a buy right now. Under $100, if this hits $100, I think I'm gonna be buying a few shares 100%. Especially even at the lowest point, they hit 85. So if it hits $100, that's another 10% decrease. Not even. That's like another 8-9% decrease. But if it does hit like that price, that will bring with their dividend. I do think it's gonna be pretty good buy just to hold for the next 2 years. Like I'm not gonna be that mad holding it. The next stock is like JP Morgan, but like Amex, American Express is also might be a decent buy as well. They have very low dividend. I mean, they have a very low P ratio of only 10, right? But the thing is, these are backed up by, at the end of the day, these companies are backed up by the government. They're not going to go bankrupt because they're literally government backed, right? You're basically buying into the government at this point with Chase. But 5 years, they've done pretty good. They have decent credit cards. They have some great branches, banks, stuff like that. that do yield some great stuff, some good money management programs, stuff like that. Like if you're rich, you're probably banking with Chase and having their Chase private clients, stuff like that. I do think like it could pretty easily hit 106, 120s, maybe 130s, and could easily go to all-time highs, right? Especially with all the government help they've gotten. But look at this, man. If you look at JP Morgan, let's go to the max chart. The last recession, when was it? 2008. Look at 2008. They went from, okay, $52 all the way down to, I don't know, I can't get this exactly. They went from $52 to $29. From 52 to 22. So they lost $22. 50% decrease. What happened after that 52% decrease? They went up 100%. They doubled. And they kept going, and you could just sold out at this point. But if you just kept holding 5 years, they went up substantially. So if another rebound happens, then you might just see it go down, boom, and all the way back up to 100. So this might be a good buy. I would say at $90, I would pick up a few shares and maybe get into this as well. This could be a pretty decent stock to just buy and hold. Even at $90, like $90, 92, that will be a pretty decent purchase price right now. It's down 5% today. So just earlier this week it was at $100. So at $90, I think that might be pretty decent buy, pretty good buy in my opinion, right? So hopefully you guys enjoyed this video. That has been all the stocks in my opinion that I'm looking into right now purchasing. I purchased Cheesecake Factory right now at I got some at 21, 22, and I got some at 2020. So I might purchase some more for the long term because I do like the company as well. They have a decent balance sheet and I just like how they're going overall. So hopefully you guys enjoyed this video. Thanks for watching. Once again, if you haven't subscribed to this channel, make sure to do so. I would really appreciate you guys subscribing because I'm trying to hit 1,000 subscribers by the end of this year. So if any of you guys can help me out, that would be really appreciated. And I'll see you on my next video.